Good afternoon, and it's Thursday, and we're here live, and we are thankful to be here. It's what I call Think, Thank, and Thankful Thursday. So Thursday is where we get a little more serious about our discussion, and of course, we have to talk about our future, and we have to talk about money. So joining us today is Leo Leonardo. I call him Leo. Sorry, Leo. And from the Scotiabank Investment Division, and Bryan Bachman from Private Banking at Bank of Montreal, BMO. So please join me in welcoming Bryan and Leonardo. So hi. Hello, Leonardo. How are you?
Hey, Sally. How's it going? Good. Yourself?
Good. Thank you for coming back. It's been a week. I must say, as long as we keep busy, right, it goes quickly. So Bryan's joining us today. I think I kind of dropped that on you. Hello, Bryan. Oh my goodness gracious. You're getting ready for winter with the beard?
Yeah, this is my self-isolation hibernation growth here. So we're doing a little bit of a contest in the office.
I see that. I see. Right. Really? A contest?
This is my entry.
You need to post pictures. But before we get started, I don't think I gave you two a real heads up on one of the topics that I want to talk about when it comes to our future. But I want to show you a couple of things. Do you mind?
By all means. Okay.
Let's give this a shot. All right. Let's see if I can make this work. I think I can. Here we go.
Buy an apple for 23 cents. How much change would you get back? Who knows the answer? Elijah?
27 cents.
Very good, Elijah. 27 cents is the correct answer.
Happy birthday, princess. Go and spoil yourself, okay? You like it?
Yeah.
We're gonna get it. Some retail therapy, right?
Right.
Don't tell your dad.
Is that in your jacket? Yep. Just a little retail therapy.
Another bill?
Bit of advice, honey. Marry Rach.
I picked it out myself.
When it tastes like that, she's gonna put me in the poorhouse. I'm gonna take care of everything.
Here you go, gentlemen.
Thank you so much.
So, as you can see, feelings make your future.
Should be an easy fix. I'll send it to your husband.
Something?
I mean, yeah, that's fair. He earns it. I spend it.
Just to clarify, are all your investments held jointly?
She's gonna put me in the poorhouse. I'll talk to your husband about the cost.
Some retail therapy, right? Go spoil yourself.
Okay, so I've watched that 4 times and I get all choked up. Okay, so now I'm going to show you another one. Okay, and then today you know what we're going to talk about, right? So
in the air. We have deployed hundreds of millions of dollars in funding for women-led businesses, and hundreds of Scotiabank employees across Canada are engaging in the cause. That's the power of the Scotiabank Women Initiative.
Okay, I have to share the screen so you can see it. I'm sorry, 1 second. Hang on. It'll work. And it's really terrific. So I think we're all going to enjoy this.
Is in the air. We have deployed hundreds of millions of dollars in funding for women-led businesses, and hundreds of Scotiabank employees across Canada are engaging in the cause. That's the power of the Scotiabank Women Initiative. It's about making change happen, and we're only getting started. Our goal is to remove the roadblocks and empower women to take their business to the next level. We aspire to be the banking partner of choice for women-led businesses in Canada by 2021. In December 2018, we kicked things off with a launch event, and we built out the Scotiabank Women Initiative into an exciting platform for real change, with a focus on 3 pillars. We're showing women the money. The program has committed to allocate $3 billion in funding to women entrepreneurs. And to open the financial doors even wider, we've teamed up with Disruption Ventures, a women-focused venture fund. Our boot camps for women running across the country are helping women increase their business savvy. More than 1,000 women have participated so far, and feedback has been overwhelmingly positive. We've also formed an advisory board of Scotiabank executives to mentor women entrepreneurs in small group settings. The uptake by executives and our frontline has been extraordinary. We've ignited momentum. We've inspired employees. We've rallied partners. Most of all, we've powered change by empowering women. Change is in the air, and we're making it happen. The Scotiabank Women Initiative.
Okay, so not to be outdone, okay, because I know Leonardo, the Bank of Montreal, has also a Women Initiative program. Bryan, I'm going to make you talk to that, but I found a little video, and let's see, I want to share it. And it's just to get you on even keel, right? Because, you know, you two know each other for quite a while, so we'll get into that in a minute here, right? But I'm just, it's great that all the banks actually are focused on women in education. So I'm big on that today, but let me see if I can play this one, okay? And then we'll get into the discussion here about investments and money. Let's see, there we go, hang on. Oh, where did it go? 1 second. It was this one.
What don't you know about Jamie? Jamie, oh wait.
It's working. Perfect. I love it. 1 second.
He's had a passion for music. Started a recording studio from a basement apartment and signed 15 artists to the label last year. Jamie worked hard to get here. Meet Jamie. It's time women's accomplishments were seen. When a bank gives women a platform to be recognized, that's the BMO effect. BMO, we're here to help.
Perfect. So I think I have a couple of the best representatives of the big fives here, Scotia and BMO. And I mean, there are other banks around. They've all got their programs, but Bryan, you know that I've been passionate about education and empowering women. The only reason is I really still believe that over 90% of our buying decisions are made by women. And thanks to men, you guys empower us with that. You tell us it's okay, whatever you want, honey, right? You know, you make the decisions. Let's buy a house, let's get a new car. By all means, right? Make the family vacation decisions. So you put us in charge, right? Of spending the money. But I think,
as you should be.
Thank you. But I think we need to be educating young women from an early age about, the power of money and, the ability for money to grow, and where is the money? I think the subject today is, where are my investments and where is the money? And I can tell you from personal experience and from many women that I know personally, if something goes wrong, a lot of them don't know where to start to look for the investments or where the investments are, okay? Like the powerful Jane story. And I think that for me, it's 2020 and it's not 1920, okay? And I think that women need to know where the money is. And I know that the banks are doing a terrific job, but I think we need to reiterate daily, right, that women need to know and men need to share. One of the subjects that I find couples have a problem talking about, and I've always recommend you talk about money monthly as a couple, right? I don't know why it's a taboo subject. I think it's still probably now more taboo than talking about sex. So I'm going to invite you both.
Yeah, it certainly is, I think, a challenging topic for a lot of households. Just an uncomfortable subject, right? And a lot of that goes back to to that mentality that you had noted about households and individuals from a very early stage, not really defining that, I guess, that shared responsibility and really kind of sectioning out and separating, these roles across, throughout households, which is, I'm really happy you shared those two videos, especially the first one through Bank of Montreal, because it touches on a couple points. I do think that, to echo your comments, education and a focus on starting individuals off, regardless of gender, at an early age is something that's really important for financial health for all Canadians moving forward, especially in these times, and for kind of the millennial generation that has seen multiple market crashes, pandemic, lots of challenges when it comes to these big purchases like buying a house, setting aside money for investments. So, if you don't have that foot forward from an early stage, unfortunately, the message in that video is one that's seen far too often, and I know both Leo and you, Sally, have encountered scenarios like that where there really are significant gaps in knowledge pertaining to a lot of the investment accounts or just financial wherewithal. So it is important that we get to the next generation with a message that really is empowering for younger generations to really start thinking about these these questions and identifying where there might be risks, and nothing like the present time to show you that unprecedented, unforeseen scenarios can roll out in a blink of an eye. It seems almost like yesterday I was in my last vacation in Aruba, and COVID-19 was just a news item in China that we hadn't quite heard about. But certainly, I think both Scotiabank, which Leo can talk to in a little bit more detail, and BMO have really come a long way in shifting that mindset, both internally on an organizational level, where we're looking at the talent within, regardless of gender, promoting leadership and from both genders, to really get a little bit of a different perspective and different management style. So leadership on the local level, leadership on the national level. Has both seen, have both seen, a lot of a lot of integration that I think if you looked back 20, 30 years ago, you wouldn't see.
Even 10.
It makes everyone's, it makes everyone's organization that much stronger, and certainly worth pursuing more so.
Well, I'd like to see, the education of, as you say, regardless of gender, right, start at an extraordinarily early age in school.
Yeah.
Children are quite smart now. So from the age of 3 and up, 4 or 5, I think it's as important as understanding the multiplication table early enough, right? So, as I say, it's 2020 and not 1920. So I'm not, sure if you guys have the wisdom of great grandparents or grandparents about, this thing about money. Yeah, I don't understand why, since everything is about money, and even more so now, COVID-19, everything, look around, right? Everyone's concerned about paying bills, and it's always been, now it's more, it's about money. How do we pay our like buy groceries and move forward? So money, to me, it's a subject that people need to be comfortable in discussing all the time. Like, I mean, I bring up money and people are always a little shy to go, but why? Why be shy about it? I mentioned to Leonard earlier, I spoke to a client a couple of days ago, and when it came to her portfolio, she's too scared to call her investment banker to find out where things are at. I'm going, I bet your investment banker hasn't called you either. So putting your head in the sand, right, and not wanting to know is not a great thing. You need to know. So, but Leo,
and she should be calling her investment banker. This last period has been a period for us of high contact for the people that we deal with, because it's part of addressing a lot of the concerns of what the market has done, and ensuring that people are comfortable and understanding what's going on as well. The investing in the markets can be daunting, even if you're somewhat familiar with it. The situation that happened, or seems like we're kind of getting over it as far as on a market basis, not a health perspective, but the situation can be daunting even if you're somewhat familiar with the markets. One of the things one of the main reasons for me that first BMO video was very powerful is because the conversation of that lady in the bank. I run across that once a month, where somebody sits across the table from me, and they're probably new to what's going on. There's a lot of strain and stress because of the emotional loss, and now we're looking at we're looking at a starting point of getting educated and a little bit more comfortable with the finance part, with the investment part. And it's difficult. Once we overcome a few hurdles, it's fun as well to work with clients that may have not had a lot of that education from an early age, but we can work on getting them caught up and understanding what's going on, the different what moves the markets, what moves the retirement portfolios, and so forth. And that's also kind of fun too. But that happens probably at least once a month where I sit at. It's happened this week. So
it's sad.
It's
it's very sad. And Bryan, I've mentioned to you in the past about what I call them lunch and learns. So I mentioned to Leo, and I think I've touched on this before. And I've told men and women, there's no question that's too silly to ask your banker, right? Things have changed. It's not like it was even 25 years ago, where you're afraid to call the banker and ask for an appointment. Like, hello. It's not that way. Everything has changed. You are important. Your banker is there to serve. I hate to say that word. to serve you, right? It's it has changed a lot. So one of the things that I'm going to announce today, and I hope you two are interested, is the invitation only lunch and learn seminar, and I need you guys to tell me whether or not you think it should be a group of 20, or if you think you can educate 50 women at a luncheon. And trust me, they're going to be having lunch in their own homes, delivered. And of course, they can share their lunch with their spouse or partner if he's in the room too. That's probably not a bad idea, but I'd like to do that. And I want you to think about how we, what this 1 hour luncheon would look like in terms of the things that you discuss, and how you can help those who have agreed to sign on for this luncheon. Okay, so maybe give that some thought. I didn't mean to spring that on you, but I think moving forward, we need to do that. I think in a past discussion, we've talked, back to the Jane Story video, it's about the little princess and it's retail therapy, and those, sometimes those things are just a little fleeting. But I have to tell you this, Brian, and even at my age, there's nothing nicer than looking at a bank account in the green, in the black, not in the red. Okay, so I think we can learn from some of our, successful entrepreneurs, business people, and I think saving. It's about, we're back to that 10% thing. It comes back and it resonates from childhood. Save 10% of what you earn. Right? And then it's not a lot, when you think about the earning potential now of people. I know it's hard, but I'm back to that. Pay yourself first. So tell me how that works, right? Do you agree or not?
Certainly.
Absolutely.
I think I think going back to that first video, it's difficult for certain individuals because it's kind of this instilled behavior, right? And you get as individuals, we get complacent in certain lifestyle wants, and really the importance of having a budget, I think, is paramount for any financial plan or any household, really. It's kind of like putting a car on autopilot and then jumping in the back seat. If you don't, if you haven't laid anything out, you're bound to crash, right? It's not going to end well, and those aren't fun conversations for individuals like myself or Leonardo here. Certainly, our mandate and thought process is sometimes around what those individuals need, and certainly tailoring solutions for their specific needs. So certainly I think it's worthwhile looking at at kind of these base level suggestions, put aside 10%, but that's a good starting point. But I really think and always have been a big proponent of doing a little bit more of a detailed financial plan, detailed budget with your partner, again taking away the taboo subject of money at the end of the month. Although it can be uncomfortable, it's conversations that we have to have, and as long as we're putting it forward without a whole lot of emotion tied to it, which is hard because money is a very emotional topic for many people. But again, that's also the benefit of having a unbiased third party help out with a financial plan, as an advisor, provide advice kind of based off your own personal scenarios that can be kind of that catalyst for a deeper conversation between households, partners. Even as an employee of private banking, we really look at private wealth offerings as a family solution. So putting forward on the odd occasion programs or guest speakers, lunches that involve the next generation on how to be fiscally responsible, starting off at a very base level, so that we can have those conversations and certainly try and erode some of those barriers of embarrassment when it comes to questions. But I will share, circling back to that first video, there's actually a program through Bank of Montreal Commercial Banking where we have mentors that will go into elementary school grade children and develop business plans with them. So kind of run through what their ideas would be, talk about what expenses are, talk about, how we're going to market this product or the business that they're looking to start, and then kind of help advise them along the way how to take those next steps. There are also great resources within the city through the Chambers of Commerce, which will always have professional advisors, individuals through the financial systems, other mentors which you can connect with and ask questions to. I found those as being very helpful resources as well too, and also different different areas that I've been involved with. I think it's Connect Edmonton, and then Tech Edmonton as well too. Sometimes industry specific, but certainly lots of resources out there and lots of individuals that are willing to have those conversations for just the benefit of helping out, right?
So you're saying Connect Edmonton. Okay, I'm just gonna write that here. That's neat to know. So is that an optional program? Going into elementary schools, is it up to the schools, or do you guys promote it through the school?
Yeah, so I believe and it's been years since I've been in the commercial banking arm, but I believe that it's working with Edmonton Public School Board, and certainly a national initiative that is worked collaboratively with on the local level to set up these programs and bring them into the curriculum on a local level for students.
That's terrific to know. I think that's fantastic. So in the past we've chatted with various mortgage people, right? You guys have met John Cliff, and one of the questions I had for John the last time that he was here, we were talking about wills and trusts and these sorts of things, and how can we package it up, until people relearn and form different habits, right? I mean, I hate to think that we have to kind of guide people or drag them through, with a rope around their necks. But I said that the start of all things, right? It starts with a couple and a home. Okay, the decision to buy a home involves their banker with their mortgage, and we talked about a will, which is a good time to do a will, right? But then, what in that qualifying and analysis of the decision to lend the money based on income, right? Is the bank looking at what they have in savings or investments, and do you take any of that into consideration going, okay, well, listen, we're making a decision, we're going to buy a home. Based on your income, you qualified for a mortgage of this much, but we're recommending and we'd like you to, how you guys budget for utilities, taxes, insurance, and whatever. Can we not, as part of that program, okay, we're going to budget to put X number of dollars in your RSPs every year or in an investment account?
It should be happening at the level that they're dealing with. So part of when I used to be a lender, that was part of the discussion. And that's one of the reasons why people who are lending money ask for statements, is to verify net worth, but also to provide the customer with advice on saving habits. So now on our levels, I can speak about my level. Then when I am looking at when I'm preparing a customer's financial plan and they relate to me their plans, which might be selling a property and then buying a new one, then we do an estimation of what the new mortgage might be, if there's capital left over from the sale, or if there's not, where are we using money from, and how we can move money around to satisfy cash flow scenarios, taxation scenarios, estate scenarios as well. So, and retirement scenarios, and that would be, this is where of your cash flow where your money should go. Now, Bryan's business model is certainly different. I work only with investments, so he might have a different answer to that question.
Yeah, sorry. It had cut out a little bit there, but I'm assuming the question was, as we're looking at mortgage lending solutions, are we taking a deeper dive into the investment, trust, and estate scenarios as well?
She asked if when somebody approaches a bank to borrow money, and perhaps it's their first home or something like that, are we looking at also advising on, well, here's your debt servicing. You should also be allocating some of your money to RSPs or tax-free savings account. Make sure that you set aside X amount of money on a monthly basis for extra costs of the home and so forth.
Well, certainly it's not their first home, even if you're moving up.
Yeah,
people qualify for $1 million mortgage. A position I'm in, I get to see, and I'm going, okay, we're making big amounts of money every month. Mm-hmm. But I'm not seeing investments, and I'm not seeing savings. I'm just seeing spending.
Yeah, and certainly, when we are looking at new lending files, whether it be a refinance, first home, downsizing, upsizing, commercial loans, one of the key factors of the application is full financial disclosure, right? So getting a full picture of exactly the ins and outs of bank accounts, what investment profiles are set up, what the risk tolerance within those investment profiles are. The benefit, I think, of dealing with a division such as, and I'll speak to BMO and the private wealth office, is we'll have a team of professionals that will all be in contact, and we do a preliminary meeting where we'll typically have an individual from our trust and estate side, an individual from our planning team, someone from our investment side, to take a review of any third-party investment policies, as well as policies within Bank of Montreal, just to make sure that we have a clearer vision of exactly what is going on for month to month, year to year, and what's important to the client, so that we can really tailor our solutions around that. Certainly, I'd say any time that there's a major life event, whether it be upsizing, downsizing a house, marriage, divorce, having kids, grandkids, exactly. That's certainly a time to take a look and review your financial plan, your trust and estate, personal directives, all those fun things that no one really likes to dive into. Certainly, I'd say those are times where you certainly should not be shy in reaching out to your banking advisor, professional, or asking those questions to your accountant, whoever that may be. I think it's important to really take a look at what those nuances are, and certainly from a primary lending standpoint, if we're looking at complex lending structures, complex tax strategies, we certainly want to have that understanding. And sometimes, if there's a file where risk appetite might be close to where the bank is not able to provide financing, having that little bit of extra due diligence in place, I found be very helpful for us to be able to find comfort in providing financing. And certainly that goes forward in a difficult time. If I can talk to my partners in our credit and risk departments and audit departments and really assure them that we've had these detailed conversations with our clients, and they're fully aware of what their financial picture is. They're not kind of, like I said, have that car on cruise control or autopilot and sitting in the back seat. There certainly is a lot more receptivity to that.
Well,
we were talking about any life event and kind of looking at what the wheels are like, the financial plan, with any kind of change like that, and the behavior of having these conversations. I can't tell you how many times it's happened where we start going through the planning process. On our first meeting, we ask questions. Sometimes I give the clients homework. They take that homework home. They start to work on it together, and it's a really a catalyst for a lot of these deep conversations that should have happened a while ago. So the importance of having these kind of progressive conversations as new things come up, there's less likelihood there's better planning, but also less likelihood of unwelcome surprises down the line.
Do you think it's possible, in part of that deep diving as you analyze, moving people up? It's so easy to, somebody is making, let's say, 350 or 500,000 a year. Okay, that's pretty serious income. Okay, I mean, at that level, the credit rating's great. You buy whatever you want, almost a car, you finance a car, a special car, a big home, etc. Okay, so I guess where I'm going with this question in the back of my mind, is there not any way to say, okay, listen, okay, we're going to give you the money for this, this, and this, but you must do this. So if there's no investment strategy, I don't know if you two have ever seen this, but maybe at the level that I'm at, and I take a look and I try to counsel clients, like, come on, okay? Because I'm like 20 miles down the road further than them, okay? And their earning potential, if you're 40 and you're earning that kind of money, okay, you're going to work till maybe you're 60. So it doesn't take a genius to figure out the math. If you're still making $500,000 for another 20 years, it's how much of that are you going to retain at the level that I see the spending. And
I think we'll have differing answers, because people usually come to me because they want to work towards not having to work. So usually people, and they're okay with those suggestions. Now, when people come in borrowing when they're coming in asking to borrow money, which then I guess that's a little bit different. So for me to provide those suggestion tends to be typically easy, because that's part of the structure that we're running. Now for lending, it might be, I'll defer that to the lender.
But he's in charge of everybody's personal.
Yeah,
the whole ball of wax.
Right? The umbrella.
Yeah.
Yeah, and I certainly think it's important to have those conversations and to really convey, what the impacts of spending are for individual households through a financial plan, to really show them where they're going to be at and whether or not they're they're going to be able to meet their financial goals, or if they're going to have to kind of circle back and maybe revisit what day-to-day life looks like, and maybe those are large changes that they have to make. Maybe they're small tweaks. Every household will be a little bit different. I don't tend to lean towards mandating certain things pertaining to loan approvals or anything along those lines. But certainly there are factors that we would want to consider, when we look at the overall credit worthiness of clients. It's not necessarily just large cash flows and great credit. We certainly want to see that the right behaviors are in place by means of saving money, right? That shows fiscal responsibility and overall reduced credit risk to the lender. So that provides us the ability to think a little bit more outside the box by means of kind of standard credit approval policy and procedure, which is just, kind of the basic guidelines. So when we really start taking a look at bespoke solutions and tax strategies tied to those lending solutions, certainly we would be providing that advice, whether it be whole life policies, whether it be something different by just means of a standard monthly contribution, just to ensure that that money is set aside and averaged into the markets to really offset some of the volatility that we've been seeing lately. So those are all conversations that are important. Again, we try and really stay away from mandating, we're going to provide you X only if you do Y on an ongoing basis, because it's very difficult to really enforce those behaviors, and they're more suggestions than behaviors, and really if an individual doesn't feel the need to really I guess follow that advice, we can only advise to the best of our ability when our clients are doing well. That's best case scenario for individuals like Leonardo and myself. So, we're always going to provide that advice and think of different ways that we can help put solutions in place to really serve acute needs, but then also take a look at, how those acute requests impact the long-term financial position of our clients. So ideally, there isn't one individual that's looking at this. Leonardo had mentioned he works with his mortgage advisors as they're kind of getting statements in and vetting the creditworthiness of individuals. They're passing them on to himself. The exact same thing goes for the private wealth office. When we're analyzing high net worth, ultra high net worth households, really taking a look at the full financial picture to ensure that everyone is kind of working together on that client service team to ensure that those needs are met, and follow up on the advice. As Leo mentioned, people get busy, they take it home. Sometimes they get halfway through it. Sometimes it can maybe start a runaway conversation inside the household, but staying on top of those things is key. And I think that if individuals are kind of regimented in the manner that they're approaching it, it can really help smooth out some of those points that might be a little bit more
Well, I understand that you can't mandate it, but I'm going to tell you, and you guys won't admit probably, but you've seen a lot of situations where, it's even with people earning huge income, automatically moving $2,000 a month when they don't even notice it. Okay. Remember, it's, physically doing it is tough. Automatically doing it is so easy. It's gone. Okay. And even, I'll use 2,000, which is not a lot for people earning, a lot of money. Okay. That's $24,000 a year that they'll never miss, but it's not lost. It's not gone. It's like, you guys are looking after it. So, I get that you can suggest, right, and make suggestions, but in the end, I understand, right? I do, but I'm baffled, because now more than ever, and I'm trying to encourage people to understand, if they learned anything from what happened to us in the last 2 months, is understanding that time is finite that we have, and once it's gone, you can't get it back. And we won't, I get it when you're 40 or in your 30s or whatever, and you're earning huge money. It just seems like we're never ever going to turn 60 or 65 somehow. Okay. But the fact remains, is that it's Thursday again. Do you know how fast this week went? Yesterday was Monday. So I get that you can't force people, right? But, I'm kind of deciding to subscribe to the thought, okay, well, maybe we don't need to borrow 800. Why don't we borrow 700 for this and 100 for that? Do you get where I'm going with this? Yeah. So, and I don't know, maybe that's a discussion, right? it's all about income and what people qualify for. I get it. And I get the total debt servicing, and I get all the rules that have been in place, right? The Bank of Canada Act, and, Canada Mortgage and Housing rules and all this. But, when I look backwards after 40 years, in real estate, it all starts with a piece of real estate. And it's amazing what you can do just by, and people like to move up, but I also want to see, I more now than ever, I really want to see that's part of the plan is saving for 60, so that you get to a situation like this pandemic or 65, and you can look at each other and go, well, you know what? Yes, we can retire. It's not a Freedom 85 plan. You've heard that term in your industry, right? Freedom 85. That's totally ridiculous. But anyway, so that
I agree on is,
sorry,
whether in the mortgage world, private banking, or through me on the investment specialist side, what we can agree on is that the importance of making a plan, and as you approach a new venture. And I asked a lot of people who are friends, and they seem to spend a lot more time looking at patio furniture with their partner than they have discussing what their cash flow or what their financial plan might be, and what really makes those 4 hours or 6 hours or 32 hours, if you got to spend them on a financial plan, that's worth a lot more than that patio furniture you enjoyed with friends for a summer or two.
No, it's so true. And this morning I made, and it doesn't sound like a major decision, but it is a major spending decision. Do I invest now in a whole, and I love flowers, okay? I do love flowers. So do I invest a few $100s in annuals, or do I put them into perennials? Okay, do you see? And that sounds, but I know people that spend thousands annually on flowers, okay? And you have to replant those every year. So this is the whole point I'm trying to make. It's spring. Like, do you want to replant, or do you want to plant something that grows? Okay, right? And how much do we really need to beautify the yard, for example? I'm using it as an analogy. There's one potentilla, which is a perennial that continues to grow and flowers every year. Does it give you the same great feeling, right, as $1,000 worth of annuals that will die in 3 months? Sorry, but I think that every day we have to make these decisions, so even COVID-19, I mean, even for me, I think about it's kind of neat to think about every dollar, right? It is. And
I'll maybe just interject there. One of the things that I always recommend, younger families that are starting out, is the kind of latte a day habit. So, if you have two professionals working and going in, getting a couple specialty coffees every day, one in the morning, maybe one in the afternoon, it adds up over time, right? So taking a look at all those, all those transactions, building a budget, as Leo said, taking that time and investing it, and it might be hours at first, as you kind of build and set up and lay that foundation. But once you have that foundation, it goes a lot smoother as time goes on. And you can hold each other accountable, or engage one of either myself or Leonardo here to kind of help hold each other accountable as we do quarterly or annual reviews on investment portfolios. But I think it's an important time right now, especially when individuals are maybe a little bit slower at work, or self-isolation with their partners, to maybe not binge as much on Netflix, and sign into your online banking, see, visualize where your money is going, and really take a little bit of a deep dive and And I think in one of our other webinar series here, we had mentioned cleaning out your financial closet. So certainly I know there's going to be a lot of donations to Goodwill here.
Mm-hmm.
As things get back to normal, with people taking a look at what they physically have in their house and cleaning out their garages, cleaning out their closets. I've been suggesting to people to review their financial statements as well too. Take a look at what their risk tolerance might be. Conversations that we had 5 years ago in the investment world, where we had show you a couple different graphs and kind of try and gauge where your risk tolerance is. Those might be a little bit different now that we're actually in the in the throes of a lot of volatility in the market. So having those conversations with your banker, having those conversations with your partner, engaging your other family members in those conversations, whether they be your parents or your children. I think those are all important, important topics to cover. And further to what you said, Sally, removing that taboo from that conversation, I think, is important for every household in Canada right now.
I just, I'm not sure how we break this taboo. I have to tell you that one of the biggest reasons I think that marriage dissolve, in the end, it's arguing over money. It's always about money in the end. And there's no one to blame. And I think it's, I try to get people to listen, you have that discussion once a month, and before you enter the space or the kitchen table, with all your questions or whatever, you have to leave in the other room. There's no one to blame here. You're in it together. So, there's no point. And I've seen arguments. I've been present where I go, whoa, wait a minute. It doesn't matter that she spent $300, okay, right, on highlights. Let's just, think about maybe moving forward. We're not going to spend $300 every quarter on highlights, but it's not easy. It seems to always trigger some argument, and it breaks my heart, because I think it's one of the biggest reason people don't stay together in the end, right?
Certainly a big cause of stress.
The stress level is horrible, right? And but there's lots of different things that people can do. Like I say, I apply those things. I'm learning, to apply that daily. Like over coffee this morning, sitting on the swing, we discussed flowers, and there's nothing wrong with discussing that, right? And the decision that was made, and it was fine, right? I'm not going to be planting any annuals this year, right? Sorry, but even though I love flowers, right, I might end up being allowed, to buy a couple of perennials that I will reap the benefits from next year. I promise to trim them, because they can grow out of control, see? But on a different level, it's really today, it's a serious topic, money, but every day the calls, it's all about money, right? In my world. It doesn't seem like so, but it is. Every time you're disposing, buying or selling something, it's about money, how to get lines of credits and different things. How do I move forward? My job is precarious. Some of the banks are going, well, we don't know if you're going to have a job in 6 months. That's, a discretionary decision right now, Bryan and Leonardo, that banks are making when they're making mortgage decisions. I don't know if you're hearing that or not, but they look at even though the length of employment in this one case, this one person, and the credit score is over 8, they weren't liking her industry. That's horrible because of what's going on, right? So there's a bit of that, and I get it. It's at their discretion, but I did recommend to them, I think they were using a mortgage broker, and I recommend that they actually go and talk to their bank that they've been banking with for 20 years. Come on. Because people who have a great credit score like that, who've been gainfully employed and never out of work, they're going to figure it out. Yes. Maybe the banker will take a chance on you. I said, I don't know. But,
yeah, I think I'll speak to that. Just as someone who's going through multiple mortgage applications and different investment lending applications right now. Certainly, our due diligence as lenders is really surrounded by the fact that we do not want to extend credit to individuals that may not have the means to repay it. So we're certainly not in a space where we want to overextend or have someone kind of living paycheck to paycheck, especially with with volatility in certain markets, retail, travel. Those are areas where we just want to make sure that there is a little bit more due diligence done. And certainly I think when you're looking at a mortgage broker, there's kind of that sense of who's going to be the cheapest, what's going to be the cheapest route to get money. It's all about that end result, that rate. Whereas, a lot of the work that individuals and teams like myself and Leo will be doing are taking a look at the longer term relationship. So it's less of a transaction, more of building an actual long-term family relationship with the individual. So having those extra questions around how has your business been impacted by COVID, I think are important questions to have for anyone at the inception. So if they are heavily impacted by it, certainly we're going to want to review and kind of reassess what the debt that we've extended to them has been, and how can we maybe take a look at restructuring that debt to make it a little bit more, I guess, stable. So taking a look at fixed rate terms instead of variable rate terms, terming out lines of credit, MasterCards, helping them build a budget. Certainly if someone has, that stellar credit rating and they're earning good income, it shows that there's been some financial responsibility. And I think it's important to keep all those things in context, right? I think it would be irresponsible for any banker or broker to approve someone whose primary business was heavily reliant on tourism, for instance, or in this instance restaurants, the hospitality industry, bars, tied to sports and recreation. Those are all industries that I think will change over time. And really, I guess what the purpose of those additional questions are is to get a good understanding of what that industry is going to look like and what those individuals' plans are, how they're addressing these challenges. And I certainly think I speak for myself and many other kind of financial partners across Canada when I say our goal is to really understand and help find solutions that kind of fit within this scenario that is new for everyone, right? There hasn't been a global pandemic in modern history that's affected us in this manner, and certainly there will be industries that are winners, industries that are losers, and brand new industries that flourish in this. So,
sure.
Understanding all of that, I think, is key, and really. Going back to your point, mortgage brokers, I don't want to knock them at all, because they, a lot of times are doing a great job and certainly looking to find the best rate and really fight for their clients. That said, if there is a little bit more of a complex scenario, I do think it's important to have that longer term relationship and understanding. With your financial advisor team.
No, great, absolutely terrific advice. And so, Leo, on the investment side, just a brief picture of what has happened this week. It's Thursday. Some of us have decided we're not going to bother following what's going on in the stock market because we have you to tell us.
I'm going to keep it short and sweet here.
Yeah, of course.
We're talking about winners and losers, and I have maybe 3 or 4 things to mention. One of them is one of the initiatives we have to empower women through education at Scotiabank is called the Sisterhood of Investing. The Sisterhood of Investing is a program that's run nationwide through some of our channels, including the Investment Specialist channel. And there's some exciting interactions going on with empowering women on learning more about essentially the financial markets, and this is in my section, the investment specialist world. Now, as far as what the markets have done in the last week, we're sitting at today more or less midpoint between 2020's highest point and the drop that we saw mostly in March. As I mentioned in our last segment last week, March was a month where there were a lot of sell-offs in the market, and April it was a month where every index had great gains, including the Nasdaq Composite Index, which had not had a gain of that percentage value since 1932. And today, Bryan was talking about some winners and losers within the context of what we're going through. Some of the biggest winners right now lie in the S&P 500, and the 5 biggest companies in the S&P 500 control a significant portion of the market cap of the S&P 500. These 5 companies, Amazon, Apple, Microsoft,
right,
are all still reporting good earnings, and this situation has affected them. Hasn't really affected them all that much. What's dragged the S&P 500 in the past, particularly in March, were some of the other factions of that market. Within the last week, the Nasdaq Composite Index continues to advance. That's the index that's related to technology, and that's in part because there's a big benefit that we're all seeing in the importance of the technology sector in the way that we are living our world and probably will be living our world in the future. So there's more reliance on that. And in Canada, the IT sector, the IT sector also led in the positive territory. Now, insofar, the week has been kind of mixed, but trending in the proper direction. One of the things that I wanted to mention, one last item that I wanted to mention, and is that I think it was April. I think it was around mid-April, the government of Canada allowed a reduction in RIF payments. So everybody who's taking a minimum RIF payment right now, that minimum RIF was about, it depends on your age. So if you're basing it about somebody who's 60 years old, would have been 4.9 around, would have been the minimum. That's been reduced by 25%. Those are any kind of income stream that's in a registered plan. So that would be an RLIF, a RIF, and so forth. LIF. So what that's doing, it's allowing, and I was kind of doing this with some of my RIF customers when there was the situation of markets in February and March. In some cases, we were just withholding those RIF payments till the markets came around to retain or preserve their capital for the next few months. But the government kind of put that in place, and I just thought I'd bring it up today because if anybody is watching and is taking a RIF, I thought that would be some valuable information to know.
Oh, it is. Thank you. That's good to know. So, Bryan, on the business side of things and some of the government programs, if you could just let us know. I know that you enlightened me that a few changes have occurred for small business, right? So we chatted about the small business loans and things. I know you guys are very busy helping your clients, right, access this support. How's that?
Yeah. So the I guess the hottest or most interesting topic for a lot of small business owners has been the Canadian Small Business Relief account, which is essentially a $70,000 line of credit that the government has put forward. They've made the stipulations to access very lenient. Essentially, if your business in 2019 has generated at least 20,000, between 20,000 and 1.5 million of T4 salary, either to yourself or to an employee, you qualify automatically for a $40,000 loan to help with certain expenses that cannot be deferred. So if you're not able to defer lease payments, insurance payments, things like that that are pertinent for businesses, you would qualify for this, just to kind of help you until we get to the point where we can start seeing some more revenues again. Each of the financial institutions has access to this via their website. So whether you're signed into online banking or you don't have access to online banking, there's a separate form that you can process. And then if you're having issues with it, it was rolled out fairly hastily. So very specific on, they wanted to get help to those who needed it right away. So there has been some hiccups that have been noted with every platform, but certainly the support in behind the scenes. And I'll speak from my personal experience. We're constantly going through and tweaking that platform to make sure that there aren't those roadblocks in place, and working with kind of workarounds if there are errors that are noted on an ongoing basis. So we've helped quite a few clients get access to those short-term funds in the last 4 or 5 weeks since this program has been rolled out. And I certainly think it's worthwhile as you're doing your budget and reviewing your business plan for business for self individuals to take a look and ask about those benefits that might be of value. So whether it be a deferral of a loan payment or an application for some of this government-backed support, that's certainly worthwhile to pursue.
Cool. Well, it's nice to get an update on that. So that particular fund hasn't run out of money, right? Because I understand lots of people are applying. So, right, hopefully they find ways to utilize that money properly and keep their business afloat. And we all look forward to moving forward. I'm always amazed at how fast 1 hour talking to you two goes by. And I have always 50 other questions. So, I always think that if I have a question, I'm sure a lot of people probably have the same question. I want to thank you guys for being here. Leo, you for being committed to being here on Thursdays. Brian, I know how busy you are and you're all over the place. I know you're working on a program. You mentioned that to me, and I think it's a good idea
in the works. So hopefully we'll be able to link up and share some of those things in the near future here. As
yeah, for sure. No, I sent you a message last night. I don't know if you read that, but yeah. But no, I think you'll bring that together. So that brings me back to this thing I want to work with, and I'm actually looking at, May is a good time. So hopefully, and I'm thinking maybe closer to, maybe the 3rd week in May. Give us a little lead time because you're all busy doing things, and I hope that you'll both be willing to participate in this in this program that I'm talking about. And it'll be a closed Zoom lunch and learn. Okay, I'll call it that. How's that? Everybody seems to know that, and so hopefully you'll come on board. I think it's a cool idea, and it's one way to get people, at a luncheon. I know things are opening up a little bit. I'm hearing all kinds of different stories about, social distancing and 15 people, or I don't know if that applies when it comes to business. Can we bring 15 people together, in a room to have a seminar? I don't know, right? So in the absence of that, I don't know if you guys have heard anything like that. Can you, bring people into a board, but how far apart,
Yeah.
That's why I think this, we deliver you lunch right? And you sign on. Yeah. You have to be committed though, right? Once you've accepted the invitation to attend, because right, space is limited for sure. But I've talked to a couple of restaurants in town, you guys, and they're excited at the prospect of delivering, these fantastic box lunches to, right,
Definitely.
to our invited guests. Yeah. So we'll see how it works. So you need to tell me whether it should be for 20 people or if it should be smaller or if it should be for 50. So I'll wait for you two to chime in on that. And invited guests have to sign up and they are committed to coming. Yeah. Okay. But I look forward to talking to you two again. I want to thank you for educating us. I learned a lot again today. And thank you for allowing me to share those profound videos that your companies, right, all in the interest of educating people. And remember, okay, education is key. And thank you guys for allowing 90% of us girls to spend all the money.
Well, thanks for having us, Sally. It's always a pleasure.
Thanks, Sally.
You're welcome, right? And so thank you guys. Hang on 1 second. I'm going to say goodbye and hopefully I can chat with you for a couple of minutes. Okay. So hang in there for a second. So I'm always, having a terrific time when Leonardo Dieste from the Scotiabank stops by and brings us investment news, and Bryan Bachman with BMO Private Banking. He's always willing to share his knowledge and information. And, these are two very committed young men. So I've always said, maybe it is, hire someone young. They'll remember your name when you're 85. And so thank you all for dropping in today. We will be here tomorrow, Friday at 1 p.m. And of course, Friday is, the fun Friday when Terrell will be, actually in this situation, Terrell will be on location. He's performing at a nursing home. So I think on location, we'll try to have him join us tomorrow. And tomorrow we'll do some fun things. So thank you very much. And remember, together we achieve more. And I look forward to seeing you tomorrow. Stay safe, stay well, and remember to social distance. We need to still eradicate COVID-19, and we're going to. Thank you very much for being here. All the best. See you tomorrow.